Welcome back, D-Traders. Here is a red-hot market review of US markets. Let's discuss crucial events of the week and the latest developments on Wall Street. The major stock indexes closed mixed yesterday. The Dow Jones edged up 0.09% on Monday, the Nasdaq showed a 0.1% downtick, and the S&P500 slipped 0.12% to close at 4,140. The three indexes traded also mixed in the New York pre-market. They traded sluggishly in the European session. Stocks of the high-tech giants printed the biggest losses, and the S&P 500 is expected to trade in the corridor between 4,090 and 4,160 points. Investors are trading cautiously for the second day ahead of the US CPI for July. The consensus suggests a decline in the annual CPI from the highest score in the last 41 years. If the prediction is true, the US inflation could have leveled off. In turn, the US Fed will have an excuse to ease the pace of rate hikes that will add to the optimism on Wall Street. Otherwise, the stock market will face a challenge due to a looming rate hike of another 75 basis points in September. On Monday, the stock market was discouraged by the corporate report from NVIDIA. The high-tech behemoth downgraded its revenue forecast for the second quarter. Shares of the microchips producer shed 6.3% after the company stated that it expected 19% decline in the second quarter, secondly, to $6.7 billion because of the weakness in the game sector. Stocks of the US car manufacturers surged after the Senate passed the bill worth $430 billion to fight climate changes. The bill sets a tax perk of $4,000 for second-hand electric cars and provides financial aid to the production. Revival Automotive stock grew 6.78%, shares of Ford Motors rose 3.14%, and the General Motors climbed 4.16% in light of this news. Analysts said that stocks of MEM companies have spiked in recent days. Stocks of MC Entertainment, GameStop, and Bed Bath & Beyond outrun the stock market as well. Since the slump in the S&P 500, shares of MC Entertainment have zoomed up 118%, Bed Bath & Beyond 88%, and GameStop 44%. At the same time, the S&P has grown only 15%. Stocks of the companies with the top market capitalization traded mixed in the pre-market. The US dollar is losing ground for the second day in a row. It's still hovering above 106 points, but it could dip below today. The index shed 0.37%, but will hardly fall significantly before the US inflation data. The expected corridor for the index is seen between 105.70 and 106.50. The greenback has a 50-50 chance for a rise or decline before the CPI release. The US currency has settled comfortably at multi-year highs. Economists reckon that inflation could have eased to 8.7% in July in annual terms from 9.1% in June. This is bearish for the US dollar. The Federal Reserve Bank of New York posted a survey on a Monday. American consumers have lower inflation expectations for the next 12 months and 3 years. After the policy meeting in July, Fed Chairman Jerome Powell refused to give forward guidance for the next meeting in September. He said that the regulator would make a decision depending on macroeconomic data. If the CPI slows down notably, the Federal Reserve might slacken the pace of monetary tightening to 50 or even 25 basis points. Nevertheless, we should not downplay the fact that investors seek shelter in the US dollar. If geopolitical jitters persist, the US dollar will enjoy beyond demand even if the US Fed softens its monetary tightening. The USD CAD is trading flat for the second day straight. Despite temporary weakness in the greenback, its Canadian peer is not able to recover. The currency pair inched up 0.08%. It's likely to hold in the corridor between 1.2820 and 1.2890. The pause in the greenback's rally and the energy standoff between Russia and the West could provide the loonie with support. Canada's main commodity, crude oil, has recovered 1% after Russia suspended its oil flow to Europe via the Desba Southern pipeline in early August. Brent crude gained 0.85% to trade at $97.54 a barrel, and WTI added 0.64%. Recently, investors have been on edge because of mounting fears over the global oil deficit. Bitcoin and other popular tokens are gyrating these days. Today, the flagship crypto lost 783 points or 3.25% in 24 hours and traded at 23,300. The crypto lost ground on Friday, however, it was 24,200. The token retraced 23,200. Ethereum immediately shed 5% to trade at $1,700. As for the news on the crypto market, the US imposed sanctions on virtual currency mixed tornado cash because to launder processed receipts of the cyber crimes. A senior Treasury Department official said Tornado Cash, identified as problematic by the Treasury, has reportedly laundered more than $7 billion worth of virtual currency since it was founded in 2019. The fundamental news is not the market catalyst today. Apparently, Bitcoin is not able to escape from the borders of a narrow range. If the token slips below 23,200, it will head towards to 22,800 and even 22,500. Alternatively, it will retest the high of $24,200. All in all, assets are trading lower ahead of the US CPI report. Tomorrow, traders are braced for a high volatile session, and today, investors are likely to express risk aversion. Anyway, we wish you profitable trades and see you tomorrow.